Good morning and welcome to my YouTube channel. Okay, where you also can listen to my radio show. I'm going to bring you up to date, I think, on a subject that's so important that the fake business news networks are not covering it. Why is it that Buffett dumped his bank stocks? I mean, Buffett is huge into bank stocks. Why would he get rid of them and buy gold if what the fake business news networks are telling us every day, the economy is recovering? Now, we all know how important banks are. Okay, I mean, they're the lifeblood of the economy. And they're the most important component to our economy because they have a multiple effect. Okay, and what do I mean by that? Well, they have a multiple effect of 52 businesses. That's right. So you have, if you think about it, there's 52 businesses that they affect, the banks. So there's your banks right here. And you have, again, you have your 52 other businesses that they affect. Now, what's that mean? Well, what happens is that if you buy a house, right, and you need furniture, you need a lawnmower, you need all these sort of things, right? So there's 52 businesses that benefit from each home sale. Now, the important thing also to remember on a home sale is if you go to a construction site and they're building a home, okay, let's say they're going to be building this house, okay, whatever, they're up there halfway, we got half the roof on, and they're going to build the house. For every one person that they have working on the house, there's 3 more that are hired in your community. 3 more. Now, why is that? Well, because the way it works is that for each person that comes on the construction site, they're making good money, and therefore that means the dry cleaners are going to increase their business, right? So the dry cleaners hire this guy. The bars are going to hire another guy because they're working, or the who knows, Walmart. So for everyone that's in the construction of the house, you have 3 more, and that's what grows the economy. I mean, housing is so important. So if the economy's doing so well, why did Buffett say, you know what, I'm going to get rid of housing? And you know what I'm going to do? I'm going to come over here and I am going to start buying gold. Because he knows what I know, okay? He's going to start buying gold because gold, okay, is going to just skyrocket. Now, because we have a tremendous amount of debt. We have $56 trillion in debt. Are you kidding me? $56 trillion. Remember, for 211 years, 41 presidents before Obama and before Bush had a $6 trillion debt. Those 2 dopes, Obama and Bush, okay, these 2 dopes, they doubled it, 12 trillion. 12 trillion. So now that's part of remember, the total national debt is $26 trillion, which is part of the 52. So the debt that we have is enormous. That means gold goes up. Now, also, we have real negative interest rates. Remember what they're doing. They are, every day, they're out here printing. They have their little printing machine out here. And every day, the Fed is printing money. And they're printing, remember, $26 billion an hour. $26 billion an hour. Can you imagine that? $26 billion. And they're printing this money. And what are they doing with all this money? Well, what they're doing is they're buying treasuries every day. So they're buying these treasuries every day, treasury bills, okay? So they go out and they purchase these treasuries, and more treasuries they buy, the interest rate drops. And that's how we got interest rates down to 0. Now, the problem we have is this, and what Warren knows, is that, again, the interest rates are at 0. That means the economy is terrible. The reason why home sales have shot up so much, okay, is because the economy is terrible. That means anytime the home sales or the economy is terrible, remember what they do. The Federal Reserve drops rates big time so to stimulate housing, okay, construction. So to say that the reason why housing is booming today is because of a strong economy is just the opposite. If interest rates were going up instead of down, that'd be the case. Remember, you raise rates in strong economies to tamp down inflation. Because when you have interest rates at 2.5%, the demand skyrockets for housing, okay, or RVs or whatever. That's inflation. So to tamp down that inflation, okay, you want to keep raising rates. So back to the point. Why is he selling the banks? Because after all, the banks are financing all these houses, 2.5%. It's got to be making the banks very, very wealthy. No, it's not. In fact, the problem is the banks are not making money. At 2.5%, they're hardly making any money at all, okay, at 2.5%. Now, the big problem is this. We know inflation is increasing. Example, autos. Larry Kudlow tells us that autos and housing is booming, but he leaves out part of the story. Listen to what he tells us, and he leaves out this part of our story here.
No economist can deny the housing boom. There is an automobile boom.
Okay, what's he leaving out? Let's take the automobile boom. Okay, the automobile boom, he's telling us, you heard him, big boom. No, there's only a boom in used cars, just used, okay? Used cars are skyrocketing, okay? Why? Because the economy is so bad, right? The economy is so bad, it's going down, okay? I mean, it's just the worst. So as the economy goes down, they tighten their belt, the consumers, and they don't buy new cars, they buy used cars. So new car sales are down 38%. 38%. Imagine that. That's new cars. Used cars are up. Used cars are up. The last time I looked, used cars are up about 22%. Okay? So 18 to 22%. So used cars are going up. But see, Larry Kudlow doesn't tell us that, does he? So used cars are going up 18%, and new cars are going down 38%. And again, the reason why, if you bought this car here the other day, if you went back the other day, or if you went back 2 weeks ago, and wanted to buy this car right here, right? Well, guess what? You could have bought it for $6,000 less. In the last 90 days, used cars went up an average of $6,000, right? That is inflation, okay? So we have inflation in cars, and we also have inflation in housing, because housing is going up so rapidly. But again, the stock market is also going up. And the stock market is going up just from the end of March to where we are today. Stock market's going up 50%. So you got stock market going up 50%, okay, right here. Stock market's going up 50%. You got automobiles, used cars, those you got inflation, they're increasing 6,000. And so the big problem is that, go back to housing at this 2.5% right here, they're going to have to raise rates because of this inflation. Our real inflation rate, by the way, is not 2%. The real inflation rate we have right now is 7%, but they won't tell you the truth. It's 7%. What Buffett knows is you're going to have to increase these rates right here. You have to increase these rates to fight inflation. And when you increase these rates, banks are going to lose money. The banks are going to get clobbered, okay? So, because remember, the banks have these 30-year fixed rate mortgages, right? And if you got 30 years fixed rate mortgages at 2.5%, and they're raising those, and rates start going up, they're fixed. They can't raise. So the banks are going to continue to lose money. And so these banks are going to go broke. We're going to have the banks are going to be in worse shape than they were in 2006 when we had the big banking collapse. So the bottom line is this. The stock market is going up every day because the economy is bad. Why? Because if you take the S&P, there's 5 stocks. Okay, 6 stocks. You have the FANG stocks, and then of course you have you know the FANG stocks. You have Facebook, you have Amazon, you have Google, and you have Netflix. Okay, so those are your Facebook, Amazon, Google, Netflix. Those 4 stocks are FANG stocks. Add to that Microsoft, and add Apple. Okay, so if you think about it, what's moving up this whole stock market? If you take the Dow 30 stocks, Dow 30, okay, Dow 30 stocks, you know that Microsoft and Apple make up 42% of the value. So of 100%, 42% of the value comes to 2 stocks. There's 28 stocks that contribute very little. The S&P, remember, that's the Dow. The S&P is going up, and remember the 5 FANG stocks are pushing the S&P up. The return on the 5 FANG stocks in the S&P is 33%. 33%. And the stocks have gone up year to date 105%, the 5 FANG stocks. But the 33% increase, okay, in the S&P, or not the 33% increase, but that is the return. The return, if you invested, that's the return, 33%. The 5 stocks are going up 105%. But if you take the other 495 stocks, you know what the return on those was? 5%. Isn't that amazing? So you got the FANG stocks giving you a return of 33%. They went up 105%. The 495 remaining stocks, they only have a return of 5%. So you got 5 stocks pushing up the whole stock market, and you got the Dow 30, you got Microsoft and Apple pushing it up. So the whole market is fake. It's being driven by these stocks. So bottom line, this whole market is a huge bubble. You take the housing, I said, these 2.5% interest rates are going to kill the banks because they got to raise rates to drive down inflation, okay? Being created by the stock market, okay, big, being created by housing, being created by autos, school loans. Inflation is running hotter and hotter. So that's when the banks are going to collapse. That's why he went and he said, you know what, I'm going to sell my banks, and I'm going to replace my banks with gold, okay? And that's what he's doing. He's buying all kinds of gold. And here's why, again, because everything is setting up beautiful for gold. We got debt, 56 trillion. That gold correlates with that debt. That's why gold is going up. Also, we have real negative interest rates because they keep on buying treasuries at an unbelievable rate of $26 billion an hour to keep rates down. So that means our interest rates are at 0, but the inflation's at 2.2%, but really 7%. That moves gold up. Inflation moves gold up. The printing of money moves gold up. Why? Because when you print money, the dollar gets weaker, and the weaker dollar, gold goes up. You got everything to push gold go up. Yes, I know we had this huge rally in gold, and everybody got nervous because it pulled back just a tiny bit. So gold went all the way up like this, and it pulled back a little bit, and people are all getting freaked out. So here's the bottom line. Warren Buffett got rid of the bank stock because he knows the banks are going to crash, just like they did back in 2006, because he knows, like I know, that you cannot have the banks filled with 2.5% fixed mortgages. When they start driving up interest rates, they're going to go broke. That's why he's over here buying gold. Okay? So that's the explanation. This is what nobody on the fake Business News Network wants to explain. Warren Buffett doesn't want to go on the air and explain it because there'd be a crash in the market. So bottom line is you got the 5 stocks are driving the S&P. 5, that's it. Or 6 stocks driving the S&P. That is ridiculous. That's called bad breath, okay, in the market. That'll take the market down every time. And you got in the Dow 30, you got two stocks driving that, which is Microsoft and Apple. So again, he knows, Buffett knows, they're setting the banks up right here. They're setting the banks up for big failure, okay, by pushing these 2.5% fixed rates. And that's why he's dumped the banks, because they're going to fail. All right. Please join my gang, okay? It's free for 10 days. And the thing you're going to like about my gang is the one thing that's important is that you know when to get out of stocks. My color-coded chart tells you when to get out. It's never wrong. You get it free for 10 days, okay? It's never wrong. When it turns red, it tells you to get out. When it turns green, it tells you to buy. So this color-coded chart tells you when to buy, when to sell, when to run like hell. And best thing about the color-coded chart, it tells you when to sell your stocks, okay? See, gold right now, turning red. That's telling me big institutions are pulling money out of gold. How beautiful is that? Has anybody ever told you when to get out of a stock? No. What drives stocks is money. What money? Big institutional money. And that's what we follow every day. 10 days free. You get to use the chart and you'll find out they work. See you on the charts.